All right, let's get this deep dive started. We're going head first into the world of Forex trading today.
Sounds exciting.
You bet it is. We're going to break down the fundamentals based on this article from November 1st, 2024, titled, What is Forex? The Basics of Forex Trading.
Great.
So, get this, the Forex market sees over $6 trillion traded every single day.
Wow.
That's
Yeah.
mind-blowing. It's a massive market, which makes it attractive and exciting for traders of really every experience level.
I could see why.
So let's start with the very basics. Forex trading is essentially buying and selling currencies.
Okay.
It's kind of like when you exchange money before a trip,
Yeah.
but on a much, much, much larger scale, obviously. And unlike the stock market, Forex trading operates 24 hours a day,
Oh, interesting.
5 days a week. You can trade almost any time you want during the work week, which is a
That's a big plus.
huge advantage, yeah.
Yeah.
And here's another thing that sets Forex apart. You can profit from both rising and falling prices.
Oh, wow.
Yeah, it's like double the opportunity.
I like that.
Now, who's participating in this market? Well, we've got central banks, governments, huge corporations, and of course, individual retail traders just like you and me.
It's a big mix.
It is.
Okay.
And all of these players create this constant fluctuation in currency values,
I see.
which is what makes this market so dynamic and exciting.
Definitely.
So we're dealing with trillions of dollars changing hands, 245 trading, a global network of players.
Sounds pretty intense. It does.
Before we dive any deeper, let's decode some of the lingo.
Okay. Good idea.
We'll start with PIP, P-I-P,
Oh,
which stands for point and percentage.
okay.
It's the smallest price movement that we measure in Forex. So for most pairs, it's that fourth decimal place, like
Yep.
0.0001.
Right.
You need to understand pips because they directly translate to profit or loss in your trades.
That makes sense.
So for example, if you buy the USD pair at, let's say, 1.1000, and then it moves up just 1 pip to 1.1001, that's a 1 pip gain.
Okay.
Seems small, but when you're trading large sums, those pips can add up big time.
Yeah.
All right, moving on to lots. Lots. These are like packages, units of currency you trade with in Forex.
Okay.
There are 3 main types:
Mm,
standard, mini, and micro.
gotcha.
A standard lot is 100,000 units.
Okay. So 100,000 units of currency.
Yeah. Might seem intimidating to some, but don't worry. There are smaller options like mini lots at 10,000 units
Mhm.
and micro lots at just 1,000.
I see.
Choosing the right lot size just depends on your account size, how much risk you want to take on.
Oh, great.
Speaking of risk, that brings us to leverage. Leverage allows you to control a way larger position using just a smaller amount of your own capital.
So it's like borrowing money, but
It's like a financial booster, basically.
I like that. That's a good way to put it.
So imagine you have $1,000 in your account,
Okay.
but with 1.10 leverage, you could control a position worth $100,000.
Whoa.
Your potential profits are amplified,
Of course.
but so are your losses. So
Yeah. Big risk, big reward kind of thing.
exactly. It's powerful, but be careful. Now, to use leverage, you need something called margin. Margin.
Yeah.
It's essentially a good faith deposit your broker holds just to cover potential losses.
It's like collateral almost.
Sort of. It's more like a security net, you know?
Okay.
And the required margin depends on, of course, how much leverage you choose.
Makes sense.
Higher leverage means higher potential rewards, but it needs a larger margin to back it up.
Wow.
And be aware of margin calls. If your account dips below the required margin,
Oh, that doesn't sound good.
no. You don't want to get a margin call. Your broker might close your positions to prevent further losses. So
it's a safety mechanism
exactly.
for both parties.
Yes, for both the trader and the broker.
Okay.
Okay, let's move on to the spread, which is basically the cost of trading Forex.
Like a fee.
Yeah, think of it like that.
Okay.
It's the difference between the bid price, which is what you can sell a currency pair at, and the ask price, which you can buy it at.
All right.
It's how brokers make their money, essentially.
So you want a smaller spread.
Exactly. A tight spread is what you're looking for.
Got it.
Now, to break down those bid and ask prices a little more, the bid price is the highest price someone's willing to pay for a currency pair at that moment.
Okay.
So if you're selling, that's what you would get.
All right.
The ask price is the lowest price a seller is willing to accept.
Uh-huh.
So it's what you'd pay to buy.
Okay.
And these prices are constantly changing based on supply and demand, which is what creates trading opportunities.
Makes sense.
So all this buying and selling is done with currency pairs. It's 2 currencies traded against each other, like the famous EUR USD, the euro, and the US dollar.
The most popular pair, right?
It is the most traded in the world, actually.
Wow.
So you're buying one currency and selling another at the same
I
time.
see.
It's like a seesaw. If one goes up, the other has to go down.
Yeah. That's a good way to think about it.
To understand these pairs a bit more, we need to talk about base and quote currencies. Base is the first one listed, like the euro and USD.
Yeah.
And the quote currency, that's the second one, it tells you how much of it you need to buy a single unit of that base currency.
No, I'm following.
So example time, if the USD is trading at, let's say, 1.10000, that means 1 euro will cost you 1.1000 US dollars.
Okay.
Now, there are a bunch of different types of currency pairs, each with their own kind of characteristics, major pairs, minor pairs, and then exotic pairs.
Okay.
Major pairs always have the US dollar, and they're the most actively traded pairs.
Right.
USD, GBP USD, the British pound and the dollar, and USD JPY, that's the US dollar, and the Japanese yen.
So the big players, basically,
Yeah, you could say that. They tend to have higher liquidity and tighter spreads.
which makes them good for new traders.
Definitely more accessible.
Okay.
Actually, here are the 6 most traded: USD, USD JPY, GBP USD, AUD USD, USD CHF, and USD CAD.
All right. I'll keep those in mind.
Then we have the minor pairs. These pairs don't have the US dollar, but they do include other major currencies.
Like what?
Well, like the euro and the British pound. That would be UURGBP.
Okay.
Or the Australian dollar and the Japanese yen, AUDJPY.
Gotcha.
These might have slightly wider spreads than the major pairs.
I see.
And finally, we have the exotic pairs. Now, these pairs typically include a major currency with one from an emerging market or a smaller economy,
Oh, interesting.
like the US dollar and the Turkish lira, that would be USDT RAI,
Okay.
or the euro and the Swedish krona, URSEK.
Gotcha.
They can be pretty volatile and have wider spreads, so they're usually for the more experienced traders who can handle the risk.
Yeah, those sound a bit more advanced.
Now, no matter what kind of pair you decide to trade, it's really important to develop good habits from the get-go. One of the best habits is keeping a trading journal.
A what?
A trading journal. It's like a diary for your trades.
Oh, okay.
You write down everything, your entry and exit points, your strategies, the size of the positions you took, your profit or loss, even like your mood during a trade.
So it's all about analyzing your decisions.
Exactly. It's like
Yeah.
self-reflection.
I like it.
The article even mentions a software called Edgewonk that can help with all this.
Cool.
It can make journaling easier, and it also has some pretty cool analytical features.
I'll have to check that out.
Now, if you want to participate in Forex trading, you need a Forex broker.
That's like the platform you use, right?
Yeah, you could think of it like that. They provide the platform to buy and sell, they execute your trades, and they'll often offer resources and market analysis tools.
So choosing a broker is important.
Super important.
Yeah.
You have to consider a lot of factors: their fees, the types of accounts they have, the quality of their platform, their customer support, and their regulatory compliance.
A lot to think about.
It is. It's like choosing a financial partner.
Yeah.
So do your research carefully and find one that really fits your needs and trading style.
I will.
So we've covered a lot already. We've talked about what Forex is, who's involved, the key terms, and even touched on essential tools.
It's been great. I'm ready for more.
Me too. We're well on our way to becoming Forex savvy.
Absolutely. All right, welcome back to the deep dive. We're ready to get into some of the more, dynamic aspects of Forex trading.
I'm ready.
Last time we talked about what Forex is, who the players are, the basic terms. Now it's time to see how this whole market really operates.
Yeah. I have to admit, this 245 market thing,
It's pretty wild, right?
it is. It's a bit intimidating. How do traders even keep up with all the activity going on all the time?
Well, that's where understanding Forex trading sessions comes in.
Okay.
The market's open 24 hours a day, sure, but there are still periods of higher and lower activity,
I can see that.
driven by, different financial centers opening and closing around the world.
So it's like the trading day is divided into chunks, almost.
Yeah, exactly.
Hmm.
The article talks about 4 main sessions.
Okay.
Each one is associated with a specific region: Sydney, Tokyo, London, and New York.
I see. So like during the Sydney session,
You got it.
we would expect to see more action, more movement with Australian dollar pairs and New Zealand dollar pairs because their financial markets are open and active.
Precisely. Each session has its own unique, almost personality.
Right.
Understanding that can give you a real advantage when it comes to timing your trades.
So if I'm trading, say, the Euro USD pair,
Yeah.
the busiest time would be when London and New York sessions overlap
You got it.
because that's when both the Euro and the US dollar are, like, in play.
Exactly. Highest volume, more volatility, trading opportunities can pop up really quickly.
Makes sense.
Now, speaking of things that can really impact the market, let's talk news.
Yeah, the article really emphasized how important economic news and global events are for Forex traders.
They're huge. Even if you're someone who mainly focuses on chart patterns and indicators, news can completely change your analysis.
Oh, yeah, for sure.
Some unexpected economic data
Right.
or some major geopolitical event can really shake things up.
It can turn the whole market on its head.
Exactly. Prices can swing like crazy. You always got to be ready for the unexpected.
So traders really have to have a plan, I guess, for dealing with news.
100%. And the article actually had some great tips for this.
Oh, yeah. Like avoiding entering new trades right before a big news release.
Yeah, it's too risky.
Things get too volatile.
You really don't know what's going to happen.
Makes sense.
And if you already have a trade open, especially if it's near your target,
Mhm.
it might be a good time to close it before the news drops. You don't want to give back your profits.
Yeah,
Sometimes it's better to play it safe.
I agree. The article also talked about tightening stop-loss orders
Oh, yeah.
before major news events.
Definitely. Or even closing positions altogether.
Yeah.
Because those price swings,
Right.
they can be wild.
You don't want your stop-loss triggered at a bad price.
Exactly. It's like that safety net fails you when you need it the most.
So err on the side of caution during those times.
Always.
Protect your capital.
That's the most important thing. And remember, after the news hits, don't just jump back into the market right away.
Well, why not?
Well, those initial reactions,
Yeah.
they can be really unpredictable. It's often better to wait, let things calm down, get a clearer picture of what's going on.
So how long should you wait?
At least 30 to 60 minutes, usually.
That makes sense. So we got to be aware of the news, be ready to act. But how do we even know what news to pay attention to? There's so much information out there.
That's true. But the article highlights some key things, like economic indicators,
Okay. Yeah.
GDP, which measures a country's economic output, unemployment data, especially the U.S. non-farm payrolls report. That one can give you a lot of insight into the job market.
Interesting.
Then there's CPI, which tracks inflation,
Gosh.
and of course, interest rate decisions, central bank meetings, anything like that.
I see.
They can have a huge impact on currencies.
Yeah, for sure. But that's a lot to keep track of.
It is. Luckily, there are tools to help you stay organized.
Oh, good.
The article mentioned Forex Factory.
Okay.
They have a really good news calendar. It lists all the major economic releases, and it even tells you how they might impact different currencies.
That sounds really useful. So we talked about news, but I want to circle back to trading journals for a minute.
Yeah, good idea.
Why are they so vital, especially for new traders?
Well, it's not just about recording wins and losses, it's about self-improvement.
Uh-huh.
By documenting every trade, you start to see patterns in your decision-making.
Like what?
Like, what triggers your impulsive trades?
Oh, I see.
What strategies are consistently profitable?
Makes sense.
And where your emotions might be clouding your judgment. It's all about becoming a better trader.
Like having a coach, almost.
Exactly. It helps you identify your strengths and weaknesses. And once you know those,
You can work on them.
you got it.
Hmm.
Adjust your strategies, refine your habits. That's what separates the successful traders from everyone else.
It's about being disciplined.
100%. It's about data, not just relying on luck or gut feelings.
Now, since we're talking about data and analysis, I think we should go back to choosing a Forex broker for a second.
Yeah.
We talked about how important that decision is.
Super important.
What are the things that traders should be looking at when they're comparing different brokers?
Well, you've got to consider things like fees. Are they commission-based or do they use spreads?
Right.
What kind of accounts do they offer?
Right.
Do they have a platform that's easy to use, one that fits your style? And what about their customer support? That's crucial.
Yeah, especially for beginners who might need a little extra help.
Absolutely. And don't forget about regulatory compliance.
Right. You want to make sure they're legit.
Exactly. Choose a broker that's regulated by a real financial authority. It's all about protecting your money.
So it really is like choosing a bank.
It is. You got to find one you trust.
It seems like successful Forex trading is about a balance of knowledge, the technical stuff, but also emotional intelligence and planning.
Yeah, you can't just jump in blindly.
Got to manage those risks and make smart choices.
Right. It's a continuous learning process.
Definitely.
But the more you learn, the more confident you'll be. And that's what it's all about.
So just to recap, we've talked about Forex trading sessions, the importance of staying on top of the news, and those key economic indicators to watch out for.
We also went over trading journals, how they can help you improve.
And the process of finding the right broker.
Yeah. We covered a lot of ground today.
There's a lot to think about.
But there's still more to uncover. Next time, we'll look at what all this knowledge actually means for you, how you can put it all into practice and start your own Forex journey.
All right, welcome back to the deep dive. We've been through a lot, all the Forex basics.
Yeah, we really have.
The lingo, the news, the journals. Now it's time to see how all this knowledge can actually be applied, like in real life.
Exactly.
Remember that question we talked about before
Yeah.
about your own financial goals
Yeah.
and how Forex trading might fit into all that?
Right. We've learned that this isn't some get-rich-quick scheme.
No.
It takes real work, knowledge, discipline, and of course, good risk management. But with the right approach,
It could be a powerful tool, right?
it can. It really can.
Forex trading lets you participate in this massive global market.
It does.
That's open 245, which is amazing. You have the chance to profit, whether prices are going up or down.
Right. It's a unique opportunity.
And you can make it fit your own risk tolerance and like how much time you have.
For sure.
But before you even think about jumping into the market, you got to know what you're trying to achieve.
Yeah, what's your goal?
Are you trying to, I don't know, supplement your income,
Right.
build some long-term wealth, or maybe even reach financial freedom?
Having that goal will keep you focused.
It's like your guiding light.
It is. Especially when you're dealing with the ups and downs that come with trading. You need that North Star.
And it's important to remember that Forex trading, like any investment, has risks.
Absolutely.
They have a risk more than you can afford to lose. Capital preservation.
Always the top priority.
It's got to be. It's easy to get caught up in the excitement, the profits.
Oh, yeah.
But you got to be realistic about the risks, too.
For sure. Successful trading isn't just about winning, it's about managing your losses well.
Protecting your capital in the long run.
Exactly.
So we've got our goals, our risk management strategies, we've got our basic knowledge.
Right.
What's next?
Time to put it all into practice.
Easier said than done, I guess.
Well, yeah, it's a journey. The article gave us the basics, but that's just scratching the surface.
It's a starting point.
It is. There's so much more to learn about Forex. It's always changing.
It's like we've just finished our basic scuba diving lesson. Now it's time for the real deep dive.
I like that analogy.
You got to keep exploring, keep learning, look into technical analysis, try different strategies, stay informed.
And don't be afraid to reach out to other traders.
Oh, yeah, that's a great point. Find a mentor. Join a community.
It can make a huge difference.
Trading doesn't have to be a solo thing.
Nope. Learn from each other, support each other.
It's all about that continuous learning process.
Absolutely. With enough dedication, you can really unlock the potential of this market.
I love that. So as we're wrapping up here, I want to leave everyone with one last thought.
Okay.
It's not just about the technical stuff, the strategies. It's also about having the right mindset.
Couldn't agree more.
Forex trading can be tough emotionally.
Yeah, it can be.
You'll have good times, bad times. You got to be resilient.
You got to be patient. Learn to manage your emotions, the highs and the lows.
It's true. Consistency and discipline, that's the key.
Don't get discouraged by setbacks. Those are going to happen.
Yeah?
Learn from your mistakes, adjust your strategy, and never stop learning. That's what it's all about.
That's great advice. Most importantly, enjoy the journey.
Right. Have some fun with it.
Forex trading can be so rewarding, intellectually stimulating.
It is. It really is.
Embrace the challenges, celebrate your wins, and always keep learning. Who knows? Maybe one day you'll be the one sharing your Forex wisdom with the world.
I love it.
Well, that's a wrap on our Forex Deep Dive. Thanks for joining us, everyone. Hope you learned some valuable stuff today and are feeling inspired.
We had a great time.
We did. Happy trading, everybody.